What am I going to be talking about today? I'm going to be talking about advisors. Do you know the difference? Now, many times when we get people coming to us, they're saying, hey, I'm looking for a financial advisor. I need some help with my money. I need to figure out, how to get ready for retirement, or I need to figure out how to save for retirement. The problem is financial advisor is really kind of a generic term. And there's a couple of different avenues as far as how the financial services industry has coalesced over the last 20 years. So what you need to know, and what we're going to do today, is tell you what the various financial professionals are, the types, and the most important thing is how they get paid. I strongly urge anybody, when you sit down with a financial advisor, always ask them, how are you getting paid? And if they give you some kind of answer like, hey, don't worry about it, my fee is built into the investments, or hey, don't worry about it, we take it off the top, you really don't pay anything, that is not true. I'd get up and leave because everybody obviously needs to get paid in this business. So the main players out there are the traditional, what we used to call stockbrokers. In fact, I used to be one. I started out with E.F. Hutton, went to Smith Barney, became Morgan Stanley. We then left and became an RIA, registered investment advisor, which I'll tell you about in a little bit. But stockbrokers are advisors, broker dealers. You can tell what kind of firms those are because you'll see in the name, they'll be very familiar. Morgan Stanley, Merrill Lynch, Warren York, Stifel, Edward D. Jones, A.G. Edwards. Those are all what are called broker dealers. Now, some of them are kind of a hybrid model. And what we meant by that is that you can be at a major brokerage firm and do a big practice where you do fee-based business only. And that's what we did when we were at Morgan Stanley. We were almost literally 99% fee-based. However, typically what happens at the major wirehouses is that if you're in a regular brokerage account, it's a transaction account where there's buying and selling. Now, we all know that right now nobody pays brokerage commissions anymore. So what kind of commissions are you paying? Obviously, if you do something called a structured note, you're going to be paying a commission if you buy a structured note. So again, ask how that particular advisor is getting paid. But again, at a broker dealer, they're allowed to charge commissions on transactions, but they're also allowed to charge fees or investment advisory fees as well. The other type of person you can go to is a financial planner. Typically, financial planners charge a rather hefty sum up front to do a very comprehensive financial plan. Typically, they charge anywhere from $2,500 to $5,000 to do a financial plan. And what this financial plan does is it goes into great detail as far as what your assets are, where your assets are invested, and then what you're trying to do from a tax standpoint, whether or not you need estates or trust, et cetera. Now, as a caveat, many times at a broker dealer like a Merrill Lynch or a Morgan Stanley, they can charge you for a financial plan. Usually they don't charge $2,000 to $5,000. Typically they have an off-the-shelf financial plan that may be a couple of $100s. So again, ask how these people get paid. A true financial planner that's charging a one-time fee of $2,500 to $5,000, that's all they're charging. They don't get paid on any investments. They don't charge any commissions. They're just doing a financial plan for you. Typically, we don't see the average person go to a financial planner. Typically, people that have 10 million or more in assets use financial planners to kind of get an idea of what they should be doing. Now, the other avenue out there are the insurance agents and brokers. Now, just as a caveat, we're, again, a registered investment advisor. We do not sell insurance, but you have insurance agents who get duly licensed. So an insurance agent may be able to sell you life insurance, but he may say to you, hey, Jack, you're retiring from your company and you got a rollover from your 401k. We could manage that for you. So what we mean by that is many times nowadays, insurance agents are duly licensed. They are securities licensed, so they can charge an advisory fee. They can also obviously charge a commission if they're doing a buffered note or some other type of investment. But again, always ask how they're charging and what they're doing. A lot of insurance agents make their living off of doing tax-deferred variable annuities inside of IRAs as an alternative. We can go into in depth as to why we think that's a bad idea. But again, insurance agents can sell life insurance. and they can also do investments as well, because many big insurance companies have investment advisory arms. Now, the other thing that happens that we don't have on our sheet here is the banks. For example, many of the large banks, if you go in, you can have a checking account, a savings account, but many times if you have a lot of balance, a lot of money in your checking or savings account, they may refer you to a bank specialist who's an investment advisor. So many banks have investment advisory arms as well. Those investment advisory arms can charge an investment fee to manage your money. So you may be able to do an IRA rollover with them, and they may charge you a fee to manage that IRA rollover. So again, if you're at a bank and they suggest you sit down with their investment advisor specialist, is usually what they call them, ask how that person is getting paid. Many times the tellers get compensated by pointing out people that have very high checking and saving balances to the branch broker, so that way that person can obviously make a living, generate fees, etc. Not that it's bad, but you just have to know that the bank branch investment advisor may be totally different and compensated totally different than obviously somebody working at the bank. Now, last but not least, registered investment advisors. That happens to be Englebert Financial Advisers. We're in the business of selling advice. We do not sell investment products. You're going to see in a further slide that we talk about the fact that we can use investment products from all over. And what we mean by that, ETFs, mutual funds, from any, as far as what I call a manufacturer, like BlackRock, State Street, Vanguard, First Trust. Those are the firms that create the investments, they create the ETFs or mutual fund providers, and we can use any of those. Typically, we custody at a major custodian, Schwab, TD Ameritrade, Fidelity. But the important point is that registered investment advisors are considered fiduciaries, which means we have to make sure we do the right thing for the client. Now, just to give you an idea, in our practice, we do a financial plan, or really a strategy write-up for our new potential clients that come into us. We don't charge for that. We think people have to see how well we do in order for them to move their money to us. So that's kind of a broad overview of what the players are. But again, here's how everybody gets paid. So those stockbrokers and wirehouse advisors, like I said, they can either earn commissions on transactions or they can be fee-based. Now, typically when they earn commissions on transactions, for example, if they sell you a variable annuity, they could have a upfront sales charge of 4 to 8%, and that's how they get paid. Many of the major wirehouses have really rotated or emphasized a fee-based business over the last 10 or 15 years. And unfortunately, many of the major wirehouses for smaller accounts push you off to an 800 number. That's a fee-based account, and you can't really do any customization with those accounts. But again, you've got to ask questions. Hey, am I paying a commission to get into this investment, or are you charging me an ongoing investment advisory fee? Now, financial planners, again, there's a myriad of ways that they charge. Many of them charge up front $2,500, $500. They may charge you by the hour. They may offer a quote subscription where once they've done a comprehensive financial plan for you, you come back every year, and for $250 or $500, they review your tax returns, and they then maybe give you an update in writing as far as what they're doing. They can sometimes, we've seen financial planners charge commissions as well. For example, sometimes financial planners, and again, this isn't wrong or right, will direct somebody to a certain type of investment product, unfortunately, usually insurance, and they can receive payments from that investment product. So even though they may not be registered, or if they are registered, if you have a financial planner that's registered, make sure you ask them, obviously, where they're registered, and then you can figure out whether or not they charge a fee or commission. So again, insurance agents and brokers, another avenue as far as offering investment advice. If you buy an insurance policy from them, for example, if you buy a very expensive whole life or universal life policy, you've got to understand how much you could pay in commission. For example, a whole life policy, if you put in $1,000 a year, the commission the first year can be over $1,000. Universal policies have high commissions as well, anywhere from 10 to as much as 20% of whatever the premium that you're putting in. But again, many brokers are, insurance agents are duly registered as, quote, financial advisors. And if you look for it, you can see that they might have a brokerage subsidiary that they're registered with, and therefore they can manage an IRA or some of your other money in a fee-based account. Always ask about how these products are being sold, and always ask to see what the break points are, what the commissions are being charged to go in, what the commissions are being charged, to leave that product. For example, typically variable annuities have an upfront sales charge of anywhere from 5 to as much as 15%. Many times annuities, variable annuities especially, have a surrender charge that lasts sometimes as long as 10 years, that if you take all your money out, you pay a surrender charge of 10% the first year, 9% the second year, 8, 7, 6, 5, 4, 3, 2, 1. Always ask for the prospectus, always ask to see what the sales charges are up front or what they call in arrears. Always ask to see what the advisory fee charges as well. Now, something to remember, and this goes to registered investment advisors as well. For example, in our practice, if you have a $100,000 account, we charge 1.25% on an annual basis. So that if you think about it, if you have a $100,000 account, we charge $1,250. We don't charge it all up front. We bill that quarterly, so it's like 0.3175 every quarter on whatever the assets are. We don't charge for any transactions in the account, any buying or selling. But many times we use ETFs or mutual funds. It's a very common practice. Those ETFs might have an internal expense charge of 0.25. So you're not really paying 1.25 to have your money managed. You're paying 1.5 to have all of your money managed. If you're using mutual funds, sometimes the mutual funds have internal expense ratios or expense charges of a half to as much as 1%. So if you're paying 1.25% and your advisor is using nothing but mutual funds, ask what those mutual funds' internal expense ratios are, which is obviously a fancy way of saying how much does it cost a year to be in those. And those could be as high as 1%. You might be paying 2.25% is what you're doing. What we like to do is we like to use low-cost ETFs in our practice. We also like to use individual stocks in our practice and individual bonds, because if you use those things, there's no additional expense to hold them or own them, unlike an ETF or a mutual fund. And again, not that ETFs or mutual funds are bad. There are many very low-cost mutual funds out there. But the real point of the matter is trying to determine how much you're totally paying in order to have your money managed. So if you're paying an investment advisor 1.25%, ask, is there any additional charges? They should be very forthcoming and say, yes, we happen to be using ETFs. The average expense ratio on the ETFs we're using is 0.2 or 0.15. Or the mutual funds, there's some very low cost, good mutual funds as well. So when you add the two together, it costs anywhere from 1.25 to as much as 1.75 to manage your money. That's not unusual. If you're starting to pay more than 2% to manage your money, that could be a little excessive. You might want to take a look at what you're getting for that. So that's really how all the expenses and charges are and how they come down to it. But everyone that you deal with should be disclosing how much you are paying, because obviously that's very important for you to determine, because we've had people come to us and they're like, hey, I'm not making any money. And it turns out that they had a high cost variable annuity inside of an IRA. Well, first of all, why you're putting a variable annuity, which is tax deferred, inside of another tax deferred account, we can't imagine why, and we can go on for about a half an hour as to why that's a bad idea. But the real reason why many insurance agents put variable annuities inside of IRAs is because there's a very hefty upfront commission of anywhere from 5 to 15%. So imagine if you have a $100,000 401k you're rolling over and it's going into a variable annuity inside an IRA, you could be paying $10,000 in commission. Well, guess what? The insurance company has got to make some money. So they've just paid the insurance agent that big commission for placing that variable annuity inside an IRA. They usually charge anywhere from 2.5% to 3% are the total costs of having a variable annuity inside an IRA. So we had one client come to us and he was very frustrated because he's like, hey, I watched the stock market go up and I'm not making any money. I watched the stock market go down and I'm losing money. And upon further examination, he was paying a total cost of over 3% to have a variable annuity inside of an IRA. Obviously, we rectified that for him. So what do we do at Englebert Financial Advisors? We're a registered investment advisor. We're biased. We think that's the best way to go because, registered investment advisors literally tend to be very transparent. We'll provide financial advice. We do a lot of strategies. We're product agnostic. And what we mean by that is we may use Goldman Sachs products, First Trust products, Vanguard products, whatever the product is that seems to work the best and is the most cost efficient, we'll end up using in our practice. We always have to act in the client's best interest as a fiduciary. And again, like I said, we charge a percentage on assets. So if you have a $100,000 account, we're charging 1.25%. It's in our best interest to get that account to $200,000 because if we make more money, you make more money and vice versa. Again, we don't charge any commissions on any securities that are bought or sold. And we like to think of ourselves as very holistic, where we take a look at all of your money, what your strategy is, what you're trying to do. And we try to treat everybody the same, whether you have $2,000 or $2 million is what we're trying to do. Now, again, the purpose of this webinar is to educate people because many people, when they walk into a financial advisor, they don't really know how these financial advisors get paid. They may be introduced to an insurance agent who says, hey, I can handle your 401k rollover. Or they may walk into a bank branch and have a teller say, hey, Mr. Jones, you have a lot of money in your savings account. Would you like to see our investment specialist here at the branch? Or they may end up getting referred to somebody that works at one of the big wirehouses like Merrill Lynch or Morgan Stanley. Very few times, do we see people always ask up front, like, hey, how are you guys getting paid? What does this do? And sometimes people are very intimidated when it comes down to asking somebody like, hey, how do you get paid? I mean, we're not used to it. For example, when you go to see the doctor, you don't walk into the doctor's office and sit down in the examination room and say, hey, doc, how are you getting paid? So many times people think that it's a taboo to ask how somebody makes their money or how they're getting paid. So what we're doing here is trying to provide, very basic definitions and have people realize that each channel of delivery of investment products, whether it's a wirehouse, whether it's a bank, insurance company, or a registered investment advisor, we all may provide multiple services. There are registered investment advisors who are insurance licensed and do sell life insurance. We just happen to not do that in our practice. Now, a lot of these professionals are also regulated by different agencies as well. So if you're dealing with somebody from Merrill Lynch or Morgan Stanley or Stifel, they're regulated by FINRA, and you can actually go to the FINRA website and pull up their registration of that particular individual and see if they have any dings on their report, any complaints, etc. The SEC registers and oversees advisors, registered investment advisors with assets that exceed $110 million. You can go to the SEC website and actually find out if somebody is SEC registered or not. Again, there's multiple channels on how investment products are delivered. So therefore, unfortunately, there are multiple regulatory agencies too. So for example, we happen to be regulated by the state of Pennsylvania with assets less than 110 million. We have to abide by every state that we have clients in. There are different registration requirements. But again, you can look up our registration. So for example, if you're dealing with an RIA, registered investment advisor, like our firm is, you can ask for our ADV form, which tells you who's in charge of the company, what we do, how we charge, etc. And then for insurance agents, there's the National Association of Insurance Commissioners that should regulate most insurance companies and insurance agents. But again, many times we found that insurance agents tend to be securities licensed as well. So they also may be covered under FINRA or under the SEC, and you can find out, whether or not that individual is registered. If you Google somebody, or if you go to one of these registrations sites and you put somebody's name in and nothing comes up and they're trying to invest your money, I would be asking a lot of questions. You do not want to be involved in some kind of Bernie Madoff Ponzi scheme, even though Bernie Madoff was registered with the SEC. So again, it's a personal choice with who you deal with, but you have to understand there are different channels as far as how you can get your investment advice. You can go to a major broker dealer. You can go to a bank and talk to a branch broker at a bank. You can go to an insurance agent who might be duly licensed. You can come to a registered investment advisor. So again, once you understand the different channels, you can then understand how everybody gets paid. Education is always the key for making financial decisions out there. And that's why we wanted to do this webinar. And again, education is very important when it comes time to your money, and as far as how you invest your money, but then how you're being charged to have your money handled. Now, sometimes people say, hey, I'm going to do it myself. I'm going to go direct with Vanguard, or I'm going to have a direct Fidelity account or a direct TD or Schwab account. You can do that, but you also have to understand the major custodians also make their money too. They make their money by obviously custodying your assets. Not a lot of money, but again, they still make money by custodying your assets. Everybody makes money, obviously, when it comes to the investment business. So again, what we're trying to do is show you the different channels. Looking for any questions here before I wrap up. I know it's a lot of information that I covered as far as delivering investment advice and how you pay for it. But again, we think it's very important. At the beginning of this, I had my contact information. If you have some questions and you feel more comfortable emailing, feel free to email me. I'd be happy to tell you any more information. So for example, if you've done something or you have some money invested somewhere and you're not sure how people are getting paid, if you have a statement and you send it to us, we can give you a pretty good idea what you're being charged and how you're being charged at. So with that, we're going to wrap up. We're going to give you early release from summer school in our last session. We're going to be back with the Englebert Angle. So make sure you subscribe to that by going to our website. And again, if you want to watch any of our videos, you can also download my app. I have an app for your cell phone. The app has a lot of content on it. I do videos every week. You can download my app by texting Chris E, CHRISE, to the number 36260. Text that, you'll get a link. You can download my app, and then you can stay in contact with us. So that's all we have. Summer school signing off. We hope to talk to you soon. Take care.